Who buys a majority of equity without getting a majority of board seats? It's unusual, isn't it?
Look, this firm is really, really well run. That's why we bought it. For various reasons, including regulatory, because we run private equity businesses that sign confidentiality agreements, and this is a liquid purchasing business of bonds often. These businesses can't be mixed, and they need to be run by a separate team. And by finding a separate team and having them highly invested, highly incented, and highly focused on running their business, we're thrilled. The fact is, we're thrilled that this management team is going to be running the business. They're going to have the say and call over the business, and we can't think of a better group to run it. So we will help them in any way we possibly can, but there's nothing we can really do to assist them on a day-to-day basis in doing the business that they run today.
I didn't know about those regulatory constraints. Will they exist in perpetuity? Does that mean it's impossible to fully integrate these firms?
We have a regulated unit today that buys securities. It's totally walled off from the other parts of Brookfield, and it doesn't share information. And this will be exactly like that, and it probably will be forever.
So full, in capital letters, integration is something that all institutional management businesses like ours that have these types of businesses have to keep walled off units for regulatory purposes. Now, marketing of products can be different. Delivering of services can be different, but the investment management arms have to be kept separate. Howard, what happens if you and Bruce don't agree on something? The buck has to stop somewhere.
The agreement, plus the nature of our relationship, gives us the opportunity to run Oaktree in line with past practice autonomously. Bruce and one of his colleagues will join our board, as you noted. They'll give us advice when they think we need it, but it's our baby to run. That's it. As Bruce indicated, they bought us because they thought it was a well-run company. You would have to be a master of the universe to say, well, we're spending $5 billion to buy your company, which has been functioning so well. You can leave now. What would they get for the $5 billion? It's really Oaktree and its people. And the other thing, of course, is that the transaction would not have had a chance if that were the basis. If that were, we'll buy your company and,
You wouldn't have done that deal?
No, that was one of the criteria.
So, Bruce, if Howard Marks and Bruce Karsh, for the foreseeable future, as your companies have said publicly, maintain operating control, where do the synergies come from?
This was not about expense synergies. This is about delivering greater numbers of products to institutional clients globally that want these type of products. And the I'll call it revenue synergies are the fact that we think we can help them expand the base of businesses and clients that they have, and they'll help us in various ways, and that's it.
So you can fundraise together?
We can facilitate fundraising in the future on separate accounts that could involve products from both strategies, yes.